While India prints 1300 crore rupees in form of cash currency daily, banks on the other hand create 8000 crore rupees per hour just by typing numbers into bank account. The recent home loan you got, bank didn't move money between vaults. They simply typed new digital currency in your bank account. It's brand new money created out of thin air. This trick not only fuels your spending, but it powers entire economies. It fuels businesses, feeds innovation, builds hospitals and schools, and yes, it even puts food on your table. But what happens when this power is abused? When money is created faster than value, the results can be catastrophic. Inflation, collapse, and recession. In this video, we are pulling back the curtain to show you how exactly money works, how banks become the modern day goldsmith, and how this financial magic can build nations or bring them to their knees. This is the bank trick that fuels the economy. Part 1. From Barter to Promises, the origin of money. To understand how money really works today, we need to go back in time and understand something very old, the promise note. Let's go way back to medieval time, where barter was the norm. People traded goods directly, wheat for cloth, milk for tools. But this system was unstandardized and wealth was difficult to be stored. Then came gold coins, a breakthrough. Gold had intrinsic value and became a widely accepted medium of exchange. Transactions became easier and more standardized. But with gold advantage came serious downsides. Carrying large amount of it was dangerous. Moving wealth from one town to another meant putting your life and your money at risk. So what changed? In 17th century London, trusted goldsmiths offered a clever solution. You could deposit your gold, say 100 gold coins, and in exchange, you would get a promise note, a piece of paper that said, I promise the bearer of this note to pay a sum of 100 gold coins. The piece of paper didn't have any intrinsic value, but it was as good as gold. Let's say you wanted to travel from town A to town B with 100 gold coins. Instead of carrying the coins and risking theft, you would hand them to a goldsmith and take this promised note. When you have reached your destination, you could present the note to retrieve your gold. Then something unexpected happened. Goldsmiths started noticing people rarely came back to claim their gold. Instead, they used these notes to trade directly. These notes were easier, lighter, and accepted by everyone, as good as gold. And that's where the trick began. Since nobody was redeeming all the gold at once, goldsmiths thought, what if we issued more promised notes than the actual gold we held? Let's say farmer needed a loan, 100 gold coins. He approached a goldsmith, but instead of giving him actual gold, the goldsmith gave him a new promised note, essentially a fake currency note. But here's the clever part. The goldsmith didn't become 100 coins poorer. His net worth was still 1000 coins. As long as not everyone tried to redeem their notes for gold at the same time, the system worked beautifully. This was the earliest form of fractional reserve banking. People started trading these notes freely and businesses flourished, all powered by trust, not actual gold. If we fast forward to today and replace goldsmiths with bank and promise note with money in your account, we have basically described the modern banking system. Part 2. How the system fuels the economy. Let's talk about how this system, although based on promises, is actually a boon for the economy. Back in the gold coin era, the amount of money was strictly limited to how much gold existed in the system. Imagine four people with 1000 rupees, evenly distributed 250 rupees each. If person 3 gives 250 rupees to person 4 and person 4 pays 250 rupees to person 1 and trade keeps happening so on. Note every time trade happens, productivity grows and value is created. But at one point, the money accumulates in hand of a single person. The economy hits its ceiling. For an economy to truly thrive, money must circulate constantly. But this isn't practically possible. A constant influx of new money ensure that trade doesn't stop. It enables businesses to expand, governments to build, and nations to grow. That's the magic of this system. Part 3. Modern banking, the money typing machine. Most of the people think of banks as vaults where their money sits securely. until they need it. But that's not the case. When you deposit your money in a bank, they simply type that number into your bank account. It's a digital promise. The bank owes you that money. Now flip the script. When you take a loan from bank don't give you anyone else's cash. They just type that number into your bank account. That's it. It's brand new money created out of thin air. Just like the goldsmiths, banks never get poorer. They have created a promise backed by system, trust, and regulation. Now, what happens when you will spend that money? Maybe you will use it to buy a house. The seller, who now has the money, will use it to buy other products, hire workers, pay rent. And those workers who now have the money will spend it further, and the chain continues. This cycle empowers businesses, feeds innovation, funds healthcare, and drives employment. Money wasn't printed, yet it's real enough to power an entire nation. But when things sound too good to be true, they actually are. Part 4: Dark Side, when the trick goes wrong. If banks keep creating money without real productivity behind it, that means without real goods and services being produced behind that money, what we get is inflation. Too much money chasing too few goods. This is what happened in US 2008. Banks began issuing loans recklessly, creating trillions of dollars in credit. Over 8 million Americans lost their jobs. Global stock market lost over $30 trillion in value.
Unemployment.
What kind of recipe is that? Overall, that's a recipe for a recession.
So the very next time you see your bank balance, remember that it is not stored cash. It is a digital IOU, modern form of the goldsmith's promised note. This system is neither good nor bad. It is a powerful tool, just like fire. It can provide warmth to your house or even burn it down. That's it for this video. See you in the next one.